Everybody, DayTraderRockStar here, and the high probability watch list for the week of, drum roll please, I know we just started off the month of November. It is a Friday. I'm on the research table. Paul RPM is on the mic, and this watch list is for the week of November 7th. It is the 4th right now, so it's the 4th going into the last couple hours of the market. It's about 1:37, and I typically like to start these during the day so I could kind of review the market conditions. Start off with a little market radar for you. Market radar is again just kind of an outlook of the markets, technically speaking, and going over the charts and stuff. And you got to just consider a bunch of news that came out over this week. The Fed announcements. That whole debacle with the press conference and the big reversal in the market and the follow through, and then we had the jobs report, and markets were rallying, and they turned over. We're pretty much flat right now, flat as a pancake. So after all is said and done, we're flat going into Friday. But how does that look for next week, and what do we think that's going to happen at the end of the day here? Because I'll probably be with you until then. On and off on this video. Here's the gap up today. We actually had a nice gap up. We had a nice pop in the Chinese stocks, a nice pop in some of the basic material stocks. It was really, and it's still looking good. The BHP looks great. The BABA looks much better. But the tech stocks are the ones that are getting nailed. And I'm calling this video the big purge. This is the week that they're purging the big tech stocks. All the PEs are coming back down. The valuations are coming down. It's a straight across purging, all right? And it's so obvious to see it. You see, it's almost, I would say you could consider this capitulation in the FANG stocks as they all kind of waterfall out here in these patterns. Just take a look at some of these. Let's just go to Amazon, and I like to look at that daily chart. And it's still purging right now. It's at the lows right now. I started picking some up yesterday. And, and I said, you know what? This is probably not done going down. I could see this down in the maybe in the high 70s. I said, but, as we get down here, I definitely want to start getting involved. Now, this also runs into another technique that I trade. It's called the 5 to 7 day pullback, and it happens after a stock comes out with the earnings and it gaps down. And typically it's 5 to 7 candles before we start to see the sellings disappear and the buying pick up, and it starts to bounce back up. So I would call it the 5 to 7 day pullback, and it happens after a gap down, usually on earnings. This fits that criteria. We're going into the 6th. We're going to go into the 7th day tomorrow, or on Monday. I wouldn't be surprised to start to see a nice, bounce move in Amazon going into Monday, Tuesday. So I would probably if we could I might even get a little bit more, another 5-10 shares just at the close, if it is at the lows. Because if we get a gap up on Monday, these things will just gap up, and people, that would be your only opportunity. That's one of the ways you're going to be looking at it. It's almost there. I mean, they're purging Amazon, they're purging Google, and even though they're considered great companies, they're overvalued still, and they had to come down in valuation. And this is exactly what we're seeing here in this, and across the board. It is really the great purge. So these are all going to set up, and that's going to be a big positive for the market, because they're going to most likely kind of overshoot. Then we're going to get these to help on the upside bounce. And there's other stocks that are relatively strong versus the tech stocks. And the market's actually starting to wade through this. The tech stocks are getting a beat down today, and the market's pretty flat on the day, or at least the S&P is. The NASDAQ is that's down quite a bit, 42 points. So, yeah, there is a lot of weakness in the NASDAQ. I mean, again, Facebook, all these. Even that's Flagstar. Sorry about that one. It's not Facebook, Johnny. It's Meta. Come on. I keep on calling it Facebook. Again, gap down, 5 to 7 day pullback. all of these are lined up to go. All of them. You know, they're all going to be bunched in together, and I'm sure they're all going to move together. So, I'm calling that the big purge. It's happening now. Maybe it continues, maybe Monday, but I want to think that, I want to go out on a limb and make a prediction that we have a gap up on Monday. I don't know how the day is going to end today. We did have that, with the gap down yesterday, kind of the gap up today, the sell-off, we're kind of flat. It's not, the daily stochastic still pointing down. It's negative. The 60-minute here is kind of coming back down for another bounce. There is a couple support lines underneath us. It's a going back to that daily. What this, I think, really tells us is we've really established a point of we tighten up our very bull and bear areas here. This candle today, the top of that candle, has to be considered one of the, if we get through that, we're probably going to be getting through 50% of that other candle. Things are going to be turning around. So I think today's candle is important to the upside. We still have, in some cases, you could say we have a higher low being put in today, but we haven't finished the day at all. But yesterday's low was a little high. So you kind of have a higher low and a higher high. And, in some ways, that is a very bullish start of a trend. And I always like to see that third candle, because that would really, kind of help us out a lot if we get a big pop or a drop. I mean, that's going to be the deciding factor. That probably is going to be on Monday. So if Monday, if we do get that gap up, which I think there's a shot of doing that. I just think there's, because the tech stocks seem to be getting, railroaded today, and we might even close on the lows on those. Any type of gap down or, would be a buying opportunity for some of these. So keep your eye on that. Amazon is on my list to add. It's starting to bounce right now. It's $88. Google's close. I have some Google. I had it after the split. Just always held on to it, but it is definitely looking like a good spot to get it if you're not in it. A couple stocks we're watching short term, BLI and AVCO. They were acting pretty good. This one's pulling back a little now. The BLI was over $2, $2.15. Had a nice little run this morning. It's pulled back a bit. Market's going sideways on a Friday, and that's the I guess the market radar is I'm looking for a little gap up, and kind of a higher low, a higher high and a higher low being put in over the next week. That would require this turning back up, but that would be bullish overall on the big channel here, because this was a nice kind of a divergence low down here. We'd like to see that first pullback not to really come back more than 50% of that initial bounce. So this area is where we want to see a bounce if we're going to get a bounce. I might be a little optimistic on it, because it feels like momentum is down and we're selling all the rallies, but that's what I'm going to be looking for. Right now, going into the close, it does not look that great. Not at all. Siebert, another cheapie, is acting a little better lately. And I just saw a little pop in it. No volume whatsoever, but just seeing it pop up on my screen there for a second. That reminded me to look at it with you. As you can see, it is starting to move from where kind of talked about it and got into it more. So it's 160 now. It's 181, and it's actually looking pretty good. It's actually looking pretty good. How do you like those cookies there? So Siebert is finally starting to move a bit. If you haven't seen yesterday's video, I did put out a video on exit strategies, trading the MES, scalping the MES. Now I haven't done any trading today on this, so I'm just going back on the chart just to see if I, looking back, I was actually taking care of some other stuff. The triple top here was a running little divergence there that dropped us down and got oversold. I'm putting it on this screen instead of the other one because I have so many other charts on there. But again, here's another great example. This was at 10:30. That was the high of the session, and that was looks like it was a borderline divergence. Probably was an easy 3-minute divergence. Let me take a look at the 3-minute time frame. Let's take a look at that. That might have been a perfect 3-minute. That came in right at 10:40. So let's take a look at 10:40. That's over here, right up here. No, I don't see the divergence on the 3. Definitely seeing it on the 1. Yeah. And then they had the one here. There was one here at 950. The 950 reversal again had a kind of a minor one, but this is the key here. Are you going to take the ones that are an obvious divergence, but underneath the 20 line? I do feel that the results are better when you have a steeper divergence, a higher turn up, a higher value on that higher low, above 20, above 30. Those are showing really good strength. So that's what we're waiting for. We're not too many, not too much to choose from today. Couple setups. So I'm sure the market's going to give us a couple before the end of the day here. So that's a good thing about this type of trading. We're not trying to make something happen. We're letting that happen come to us. We'll easily see it. I'll understand it. I'll recognize it. I'll take it, and we'll move on from it. And we'll continue to do that. And there'll be good ones when the market's giving us that good volatility, and we're inside big channels and stuff, and we know we could hold things longer. That's when you make your majority. And there'll be short ones that keep you busy, but you have to also understand what the market is doing and take what the market's giving you. Here, these little choppy things could be very annoying. You might be able to get a divergence out of it, get 2 ticks, and then comes back down. You had 2 ticks, but you wanted to get a point or 2 points, and sometimes you have to read into that and just accept what the market is giving you in the previous trend and just stick to it. And also watch that watch that rotation. In this case, it was like very choppy. It's a little chop fest going down here. All right, going back to a couple of the stocks here. We picked up that Seabird here the 1st of November, right back here, right at the lows. So it was actually a nice little move. Got it at 167. It's 181 now. Still looks good. Just a little update on that. But just, again, looking at the HPS watch list, which we're going to go over in a second, I can't, not go back to some of these stocks like Amazon, Facebook, or Meta. Right down the list. Google, Microsoft, even the net here today is getting hit. The valuations, are all getting taken down. And one of the reasons I was always skeptical of the market not making a bottom, I said, well, that Kathy Wood's ARC had to make new lows before I felt more comfortable. I felt that her ETF, that ETF that has all those pandemic stocks and stuff, they were just, just does not look good. And I just kind of said, we'll have to wait for that just to fail itself. And finally, it's starting to break down a sub. I mean, I'm sure there's some bounce in it if the market bounces, but that's also, all those high valuation stocks are just getting taken out. Square actually got a little bounce, right? What do we got on that Square today? but it's come back in. Let me see what it is. All overall, well, it's down a little. All right, so one more thing I wanted to show you on this over here, as we kind of roll into the 2 o'clock time frame. Market's kind of stalled out here, very close to the lows. Right down here, we're kind of like right on a ledge. You can look at this as kind of a descending triangle where the pressure's on the top, and it's more of a area of support here. So we call descending triangle, descending onto itself. And typically, and again, don't say typical in the markets anymore, but this pattern was taught to show that there would be, people would be paying less and less for the price, or would be looking for a better price, and eventually there would be no takers, and it would drop. The price would drop. But I've seen this get to this point and just and pop also. So I never go for those any type of pennant triangle patterns. The first move is not always your real move. But it does give you an idea of that maybe there's going to be a catalyst coming along, just a pattern breakout type of catalyst. The lows or the breakout of the downward channel could give us a little bump. Which way does it go? Sometimes we also look for the divergences to kind of play out in this type of pattern too. That might give us a little better. But look how flat this is. This is around 43.50 to 60.10. It's just this is the type of market it is. It's nothing I could do about it. I wouldn't try to trade this right now. So let's go over to another chart here. Another one I picked up this week. We'll go over a couple of those too. Is the BHP. And we had a beautiful pop in that today. Big pop in that. Broke through that downward trend line. We're sticking with it because of the nice divergence. I said this is one of the few that have given us a divergence and it hasn't broken out yet. In the last watch list we talked about all the divergences, but they've all broken out. So there was a few that haven't broken out. The BHP. There was a couple other ones too. I think I wrote them down. The veil. Look at the veil today. Oh man, that's a nice divergence. It just kind of started to move. Let me take a look at the and a good volume. I'd like to see that follow through. On Monday. So Disney's kind of a little pullback today. Not really participating too much here. I'm watching this Coop going into next. Ooh, yeah, nice breakdown on Coop. It's down to wow, that really got smashed. Down to almost $40-something. $40.50 almost. That come out with earnings? The earnings were coming up next week. I think it's going down before earnings. Look at that breakdown. That's a breakdown. $380. I got to look at that one. I'll put that one on the list for next week. I have to make sure what earnings are on that. Actually, I'll tell you right now, that's what my job is. Let's just get that out of the way. All right, here's Coop. Earnings going to be December 6th. All right, last earnings here report was, looks like they had a little upside pop there. Reported the second quarter of July 22 earnings of 22 cents per share on revenues of $211 million. And consensus was for 9 cents a share on revenues of $204 million. Earnings Wizard number was 13 cents a share. All right. Revenues grew 17% on the year. Customer said expects third quarter non-GAAP earnings 8 cents to 10 cents per share on revenues of $211 to $214. Current consensus estimates were for 6 cents per share on revenues, $214 million for the quarter. All right, company says so it's all right. That doesn't sound that bad. With this discount today. I'll take a little deeper look here on this one. I might be missing something on the news. Yeah, it fell into the valuation trap. It's just stocks that are getting hit. So this starts to look interesting. Big smackdown today. I mean, definitely put it on your radar. Probably look at it a little closer. Get it. Maybe even start taking a position in it. I mean, it just seems $40. Looks really interesting. Well, I have it written down going into next week. If I don't act on it, if I do act on it before the close, you'll hear about it. You remember Huddy? Well, Huddy's back on the move here. Huddy seems to just caught that late day ramp up it did yesterday afternoon. It had the same type of pop. Got halted a couple times and popped up, and now it's starting to climb again. It was down to about $60. Now it's $151 over the last 2 hours. Holy! I mean, this is a dangerous stock. Don't forget that. If you do get involved in something like that, it will take you for a ride if you let it. Wow. All right. Well, that's back on the move. Markets here are getting weaker here, and here's our lower level of this descending triangle. Keep on hearing the low tick alerts coming in through the tradeometer, and that's a feature here for members. The first part of this video will go out to the public, and then the second part, which will contain the stocks for next week and the targets, will go to the members. So. But this is when you hear that high tick alert or low tick alert, this is our tradeometer. That comes with the membership. And that really is it's an indicator that helps us understand the multiple time frames and when multiple time frames get oversold. Now this, of course, has been a bloodbath to the downside most of the day. It's a slow grind here. We only had one alert, and they seemed to, once it dropped out of it, there was some news actually that came out of Europe that kind of knocked this trade down here, and then we've been going chopping sideways, just ready to roll over. It seems like we haven't gotten another oversold level, but that might be coming up soon. And that high tick alert, low tick alert here is right here. So this is a great little tool. You get it with your membership here at DayTrader Radio. You don't have to attach it to anything. It runs on its own. You just open it up, put it on your monitors. It'll tell you where the buy and sell signals are, based off of the HPS stochastic oscillators. You can see down here on this, you can actually see this low stochastic. It hasn't gotten oversold yet, which we wait for before we get any oversold levels. That's the bigger time frame. That's the 5 minute time frame. So the 5 minute here is still kind of grinding down. There's the Huddy here, 175 now. Oh my God. It went from 80 to 175, and just like that. Should halt here probably soon, and then when it opens up, then we'll see what happens. Be careful on that. I wanted to take a fast look here at the SPX here with you, and then we're going to start some of the stocks that we're going to be watching. Some of them we already went over. I'm just going to go into a little bit more detail on them. All right, we're going to go into a little bit more detail. Here's the S&P 5 minute chart. And again, looks like a descending triangle about to break down. We're oversold. Looks very sad. The market looks sad today. Friday. Everything looks like it's kind of in that rollover phase here, even though the hourly is oversold. So beware of something that's so obvious. You know, when it's so obvious, like, oh, look at the rollover pattern coming up. That's when you'll see the spike higher pattern take over. But I just say, wait for the divergence. The divergence will tell you everything. All right. See, this was not a divergence yet. We're just borderline there. All right, so let's kind of finish up the first part of this video. The thing is, we're closer to a significant reversal in the market than we've ever been before, other than maybe a few weeks ago when we were a little lower than this price. But as we go on and we continue to, adjust things with the monetary policy and the rate increases, this should work out, and it's just a matter of timing. So, surround yourself with this. At this point, you should be surrounding yourself with the stocks that will be the first ones to be grabbed back up, and those are, of course, the great ones. The best of breed, and even in the tech sector, Apple has to be, one of those that's going to come right back. Google. I mean, how far, how fast, that's to be seen. But at these levels right now, these are the stocks you want to be kind of making your shopping list. That's exactly what you should do. I have a list right here, stocks that you're getting ready, you're watching. If you have an opportunity, like today, the Coop could be that opportunity. Google is definitely probably that opportunity. Amazon, probably that opportunity. I picked up a little Amazon yesterday. So there is some opportunities starting to happen, and that's what we're going to go over now, those stocks. And the market's getting a little bounce, and I'll now pick up on that. So this, some people will lose the rest of this video. You can head over to Day Trading Radio and sign up for a membership there to get everything involved. Actually, try the free trial. That way you can get into our dashboard, into our chat rooms. A lot of traders working together every day. So hopefully I'll see you there. Okay, and then let's pick up where we, what we're going to pick up now is where we're going to concentrate for next Monday here. Now, the day's not over yet, so I always want to see how the day closes out.